Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
Hello there, I am Yatin Mota.
Well, what a thriller of a Thursday it has turned out to be for the market, Yatin, given the fact that we've been talking about ab ki baar 24,000 par और वो हो गया आज. So we are above that 24,000 mark. The sensex as well hit that 79,000 mark today. But the 24,000 mark from 23 to 24,000, that 1,000 point rally is the second fastest for the Nifty. It has come in 23 sessions. The previous 1,000 point rally from 22 to 23,000 came in 88 trading sessions. So yes, this has come pretty quick. And Yatin, I want to point out that ever since India defeated Australia, since then, from Monday, we have seen this record-setting rally continue, right? So, today's match between India and England gains even more significance. Who knows, we can hit higher highs going forward. And of course, the fact that Nifty has also ended the June series with gains of somewhere around 6.5% or thereabouts. So, yes, we started the June series on an iffy note. Of course, we had that election verdict and we had a dire reaction to it, but we have really come quite a far way from there and hit that 24,000 mark. Aside of that, Yatin, but broader end of the markets weren't all that great today, although the Nifty mid-cap index managed to come off the day's lows and ended the day in the green, but the advance decline ratio was tilted in favor of losers. Advance decline ratio was at 1:2 on the NSE. Banks took a break after hitting a fresh 52-week high of 53,100 or thereabouts. You had IT, that rallied 2% or thereabouts. Metals were good and so was the FMCG pack. In terms of gainers, Yatin, of course, the big cement deal, we will be talking about that in details. Ultratech was the top Nifty gainer, so was LTI Mindtree, NTPC and the likes. And on the losing end, you had Shriram Finance and L&T. But take us through the broader end of the market. Cement pack once again in focus.
Absolutely, and the cement consolidation seems inevitable with Adani acquiring Penna Cement a few weeks back, and now Ultratech buying a financial stake in India Cements, nearly 23% bought as per the Ultratech's release. Now, apart from the newsmakers, we have Route Mobile that moved 14% in the F&O. Obviously, we had India Cements higher by nearly 12%, inching higher because of that open market buying by Ultratech. Mazgaon Dock, Whirlpool, Suven Pharma, all of these stocks also doing well, almost 7-8% gains coming in there. When it comes to the losers, we have Deepak Fertilizers, and after a small rally, we saw 6% of profit taking coming in there. ACI, which is Arcalian Chemicals, that stock moved 5% lower after the block deal which happened, in which Piramal's private equity fund sold shares. Suntech Realty, Equitas Bank, and Fact are the other stocks wherein we saw profit taking. But clearly, if you look at stocks at 52-week high, we have India Cement, Mazgaon Dock, Mannapuram, we have stocks like Kalyan Jewelers, Dixon Technologies, Siemens, Policy Bazaar. So whole host of stock specific action on the large, but as Nandita was mentioning, some weakness in the mid cap space, some profit taking as we move to record levels, and probably the reason why the advance decline ratio is almost 1:2.
That's true, and that has been the case over the last few sessions, Yatin. But on that note, let's talk about the big cement deal that dominated the headlines today. Of course, Ultratech has now bought somewhere around 20% stake, right, vis-a-vis the open market at a price of 267 rupees per share. The company has said that it will be acquiring 3.5% or 3.4% stake at a price of 285 rupees per share. But on an EV per ton basis, that 267 rupees per share, it translates into an equity investment valued at $85 per ton, which is less than the replacement cost as well, right? So with this acquisition in the south, yesterday also we were talking about how there's a lot of consolidation happening, especially in the southern state, right? So excluding Kesoram, the total capacity in the south of Ultratech is at 20.5 million tons per MTPA. And aside of that, along with India Cements as well as Kesoram, the total capacity will go up to 45 million tons per annum, right? So that will almost double the stake of Ultratech in the southern region. India Cements overall has a capacity of 14.45 MTPA. Remember, Ultratech had recently crossed that 150 MTPA milestone, and that came in very less time. The 50 MTPA increase happened just in about less than 5 years. But the market share in the south will increase to 22% vis-a-vis 10%. And Ultratech and Adani together will have a share of 35% in the southern state when it comes to cement. So yes, all in all, it's a very important development, and experts are saying that the rationale behind this acquisition of Ultratech is the fact that it wants to thwart the ambitions of any other corporate rival making acquisition move on India Cements, and wants to consolidate its position in the south. As you mentioned, Ambuja had already acquired Penna Cements in a 10,000 crore rupee deal, right? So yes, lots happening in the south. But tell me one thing: is there or are there any chances of an open offer coming, or how is it really poised going forward?
So as you were mentioning, probably Radhakishan Damani has sold his stake to Ultratech Cement that 20% at 267 rupees, and that deal happened in the block window. Post that, Ultratech Cement said that the additional stake of nearly 3.5% will be bought up to 285 rupees per share. Till the time Ultratech doesn't cross the 25% mark, there will be no open offer. Currently, Ultratech says that this 23% stake that they intend to buy, which they probably would have bought today in full, is only a financial investment. So it's more of a strategic investment. Probably market sees it as a strategy or a white knight strategy to keep JSW Cement and Ambuja Cement away from India Cements, because both of these players were eyeing stake in India Cements. So clearly, Srinivasan, he remains the promoter with a meager 20-25% kind of a stake level, with the second largest shareholder being Ultratech Cement, and probably the markets reads it as a positive because Ultratech is improving their overall presence in the south. We have Adani Group also, Ambuja Cement recently concluding a transaction with Penna Cement, which is again a more Andhra kind of play. So yes, a lot of consolidation in the cement space. A lot of smaller players also did move up in trade, and the war to getting the highest market share and best quality asset remains between Ambuja as well as Ultratech. Ultratech currently targets the total capacity in the next few financial years to be around 200 million tons, whereas Ambuja is targeting close to 140 million tons. Both these companies are open to inorganic opportunities, and yes, a clear sign of consolidation in the cement space with this particular stake buy from Ultratech.
Right, I think it also bodes well for southern players like India Cements, because the minority shareholders, according to analysts, will get a good exit, and cement makers in the south were also struggling with overcapacity and non-remunerative prices. Well, that was about the big deal, but there's another acquisition that has taken place, and Dr. Reddy's has acquired the over-the-counter brands in nicotine replacement therapy in the non-US markets from Haleon. Now, the acquisition of nicotine replacement therapy brands was for somewhere around 500 million pounds, and this has largely underwhelmed Street. Even though the stock was doing well today, some of the brokerages have said that they aren't really convinced with this acquisition move of Dr. Reddy's. But the deal is largely expected to provide a global stage for the larger OTC platform for Dr. Reddy's. Let's see what the brokerages are really saying about this deal. Now, Jefferies has said that it will maintain an underperform rating on the stock with a target price of 5,010 rupees, which is an 18% downside from yesterday's close price. Now, the nicotine replacement therapy business, which includes the Nicotinell brand, generated revenues of somewhere around 217 million pounds last year. Now, Jefferies says that Nicotinell is a mature brand and is sold in more than 30 countries, including Europe, Canada, Japan and Australia. However, it has pointed out that the growth of these OTC brands have remained stagnant over the last few years, and it would require upfront investments before the benefit starts accruing. And for that, it says that the synergies of this acquisition could only start reflecting as late as FY27 to FY28. Nomura has also said that it is not convinced with this acquisition, and the strategic rationale is really unconvincing to Nomura. It says that it will retain its neutral call with the target price of 6,499 rupees per share. It says that the acquisition can be EPS accretive, but the return on invested capital likely will be in high single digits. But there are some brokerages that are in support of this deal, and they've said that the acquisition really aligns with Dr. Reddy's strategy, and funding will not be an issue because of the strong balance sheet as well as consistent free cash flow generation. And they've also pointed out that the valuation of the deal is fair given the portfolio's global footprint. But given the fact that the brand that they have acquired has remained stagnant, and Dr. Reddy's will have to pump in quite a lot of money to generate good revenues from these brands, I think we'll have to see how really it pans out, but brokerages are rather divided.
Yeah, brokerages are divided. However, the stock has given its verdict. The stock of DRL in the opening trade was nearly 2% higher. But yes, this is one transaction which has kept Dr. Reddy's in the news today.
But I think one more thing I want to ask you, since we have that SEBI board meet today, what are the key expectations from that?
So I think the key expectations from the market perspective, Nandita, is the criteria for F&O stocks. I think SEBI will come out with a comprehensive regulation when it comes to stocks which can get included and excluded in the future and option segment. Whether it's autonomous or is it approval based, that needs to be seen. A lot of talks relating to the option trading market as to there could be some action by SEBI with respect to the option trading, which has been hugely done by the retail participants, and most of them have been incurring large amount of losses. So I think SEBI is trying to get some regulations and some criteria when it comes to the F&O segment. Futures, as I mentioned, there could be some criteria or some kind of a framework that will be introduced, and probably there are several other smaller aspects which will be discussed for this board meeting. But the press conference at 6 p.m. Will get more clarity as to what SEBI has to do in this board meeting. But yes, expect a lot of reforms or probably some outcomes on the F&O markets, especially with retail derivatives.
Right, of course, important meet today, and we'll be of course watching out for all the developments and announcements relating to F&O as well. But with that, we have come to the end of this edition of Closing Bell, leaving the market in good stead. Of course, 6% or 7% kind of gains for the June series. It's a good, it's been a good week, and of course, important match coming up today as well. Let's see whether we have some kind of positive rub-off impact if India manages to defeat England in the semi-finals. But from Yatin and me, thanks a lot for watching. Stay tuned to Moneycontrol for all your other news and updates.